Well, hello there. How's it going? This is Rob from Maverick. Nice to see you all here. Let's jump into the market roundup. Today was an ugly, ugly day. Now, we came into this week as a -3, which is the most bearish we could possibly get. And we've been at -3 for the last 2 to 3 weeks. We talked over the weekend in our trading room that capitulation is coming. Capitulation is coming, and we are at the tail end of capitulation. So what I said last weekend was, I want to see the market sell off hard the first of the week, and then I think we probably bounce back later in the week. And we talked about with all of our traders that we should start to pare back our bearishness. We're not going bullish at all. This is a bear market, but we're going to pare back our bearishness and go to a lot of cash. And so we saw the sell-off continue. We saw, again, the Dow down 2, S&P down 3, Nasdaq and Russell down 4, oil down 6, gold down. Everything was down. Everything was down. And if we take a look at the charts, we broke through that support last week. And really, this was just the follow-through from last week. We broke through that major support here on the SPY. This candle is an ugly candle. This was down 3.2%. So we have to take a look at this and say, okay, we're in this capitulation phase. We're probably going to get another candle or two on these. We will not have any idea when a bottom is coming until we get a reversal candle and then we get a confirmation candle. So as the market drops, we have to get a candle like a hammer candle would be a nice reversal candle, followed by a confirmation candle to the upside, or something like a bullish engulfing candle, a big gap down and then a close above our previous high. Until we get this signal, this is in free fall. The markets are in free fall, and that's exactly where it is right now. We had very little buying come in at the end of the day. We closed near the end of it at the low. Everything is bearish here. This is as bearish as you can possibly get. Now, we always say that when we get to these -3s and +3s, these happen at the end of moves, where it gets super, super intense. On the upside, it's called a blow-off top, where everyone rushes in. It has a big run to the upside before it falls. On the downside, it's called capitulation. Now, capitulation looks like this. We had an 86% down day today. Now, if you've ever heard those terms, 90% down day, that's about as negative of a day as you can possibly get. And it always reminds me of the saying on Wall Street. Sometimes you can't sell what you want to. You have to sell what you can. And that's what happened today, is that pretty much this was liquidation across the board. This was simply everyone getting out of equities, saying, hey, you know what? I want to pare back all my holdings. You know, I was 40% allocated. I only want to be 30% allocated. And so they just sell indiscriminately. And again, that's what we see at the bottom of moves. What we also see at the bottom of moves is the VIX. So here's the volatility index. As you can see, we are approaching where we were in March when we had that very significant bottom where the markets rallied 8% and the Nasdaq rallied 12%. We're getting up to those levels here. Now look, we're not there yet. And we could go higher. We could go to 40. There's no limit on where this can go. I remember back in 2008, it actually intraday got to 120. Is incredible. So it doesn't mean it has to stop here, but what it's telling us is that volatility is elevated, people are liquidating. So it's just another signal that yes, the market's in free fall. Yes, we want to be bearish, but we want to start looking to pull back on that bearishness, take some of our big profits, go to a heavier allocation of cash, and then we'll look to redeploy that when the market rallies and we can sell into that rally. Or if we do get some sort of reversal or turnaround, we might be looking to buy that. But like I said, I think the market is looking at like a -3 right now. Now, our weekly outlook was for a 0. And I called for a sell-off at the first part of the week and a rebound in the second part of the week. So as far as my outlook right here on Monday, at least I got the first part right. I guess we will find out if I got the second part right. But ultimately, this is as bearish as you can possibly get. That's just all there is to it. Let's take a look at a few trades here. Now, these are some of the trades that we talked about in the trading room over the weekend. I want to go through just a few of them. Bristol Myers was one we had on the bull side. It did not have an update today. It was down. But I wanted to really point out the candle's a good candle. At one point, this looked like a really nasty red candle. And by the end of the day, it recovered and actually closed higher than it opened. The fact that it's a green candle means there was more buyers than sellers today, even on a day like today. So this is a great candle. It doesn't mean that it's going to run up to 78, where our target was. It doesn't have to do anything we want, but this is just a really good candle to see when you're looking for a bullish trade in a bearish market. On the sideways side, we talked about Philip Morris. We did this trade 1 week ago with 100 butterfly, and it hit very nicely. So now we're looking at, again, same thing, 100 butterfly. So this is going to be a sideways trade. For those of you options traders out there, just between 95 and 105 with a midpoint of 100 on the butterfly. On the short side, we had Alcoa. This was our belly flop pattern. So over the weekend in our trading room, we talked about how this is our belly flop pattern where you have a very strong stock. It has a big catastrophic drop on big volume, goes sideways for about 2 weeks, and then falls out of bed. We played this last week, had a really nice trade, and we picked Alcoa this week for another one. So big drop, 11% drop today on Alcoa. Another one we had was AMC short. We talked about how it had come down, based, broke down on Friday. So again, great candle, down 9% today. Again, there's money to be made on the short side for sure. But again, every day and every time we drop more, it is going to be less candles until we finally do get a tradable bottom. So just keep that in mind. There's still money to be made on the short side, but at this point, you've got to be ready to admit that the move is exhausted and wait. That's really what you need to be doing at this point. We also had a short on Western Union, and you can see Western Union gap down today, but had nothing but buying all day long. So here we have a short position or a bearish position, and it actually had an up candle up 1.36%. Look, it's definitely not the candle you want to see when you're bearish. It's definitely not what we like. We would have liked to see a big red candle. But when we take a look at this, technically speaking, it's still in this range of 1660 up to 1770. Until it breaks out of that range, we're just fine because we are looking at a bear call spread here on this one. So the bear call spread still looks very, very doable here. Let's talk about what is going to look like tomorrow. Nearing capitulation. This was an 86% down day. Let's just call it a 90% down day. We've got the VIX up around 33.5. We're getting close. We're getting close. Now look, the market doesn't have to do anything I think it's going to do, what you think it's going to do. We could go down for 7 more days. We could go down for 17 more days. We have no idea. But what we do know is when we get to these extreme ratings, they usually get some sort of reversal. And that's where we are. So I think what you want to be doing is your bearish ones, keep them, hold them, and milk as much of the profits as you can out of them. But then once those are done, I think you go to cash and you look to short a rally. I think that's going to be the next big trade here. No economic reports tomorrow other than the NFIB Small Business Index, which no one's going to care about. And you can see some decent earnings on the table here with Coinbase, Roblox, things like that. Thanks for joining me. That's the Market Roundup. Goodbye, everybody.